we're going to be looking on the sentiment data and trying to get some low risks and high reward setups. I've selected a few currencies like the US dollar, Japanese yen, the euro yen, and the New Zealand dollar. Maybe we will see if there is any needed to add any other currencies, but a lot of movements happening on the New Zealand dollar and, you know, anything related to the New Zealand dollar. So I just want to show you that. And then afterwards, we can have a discussion about the RBNZ OCR, that is the official cash rate, that they've changed for 25 basis points. And they are expected to go to 2 more 25 basis points. So consecutively, that would be a 75 basis points cut until December. Okay, so that would be pretty good. We just need to see how the New Zealand dollar will react to that. Of course, it will be awesome for the mortgage holders, because if I'm not wrong, every 0.25%, so any 25 basis points cut, that repercutes to like $1,000 to $2,000 less every year for them. Okay, so that is around like $100 to $150 per month of difference. It's pretty good. You know, it's a very good. I would say it's pretty good, but anyways, let's see how that goes. There you go. Take this off. Oops, sorry. So if I press here, it goes next. Interesting. Anyways, so for those who forgot, maybe you don't, but anyways, we use the FinLogic's sentiment tool for the Wednesday webinars, okay? It's a completely free tool, and it looks like that. How do you get access to it? It's pretty simple. You have two ways. You have the first way to just click into the link I've sent on the chat, and you're going to get directly through this page. Or if you wish to know the whole process on how to get here, you just open a new tab on Google and you type finlogics.com, click enter, and that's where you're going to land. Don't panic. It's pretty simple. Just come into tools on the top left corner, and then you go, you'd see, if you want, you have the economic calendar as well. If you trade stocks, you have the earnings calendar, and then the market sentiment. That's where we're going to want. So after you click there, this is what you're going to see. And this tool gets updated every 15 minutes. Okay. So I highly, highly recommend you guys to come and check it at least twice a day. Okay. Maybe one when you open up the trade, or the second one when you know, something happens around the market. Even 3 times a day, it's pretty helpful already. I would say another tip for this trading strategy is look before. So let's say you come here today, today's Wednesday, and we have the GBP USD looking a strong buy, okay? Or even better, let's say euro dollar as a long position. That's good. Now, with that, you can long that now, today, or you can start to track that and to build a better position on the market. What I mean by this is, if you open the chart, right, and you see that the market is, wait a minute, euro dollar. You open the chart and you see that the market is actually going nowhere at the moment, okay? So you can probably wait. As I say, the market would come to this level. Anyways, you could probably wait for a better place to long your position, okay? So based on right here, we can clearly see that the market is on a sort of like consolidation at this moment, okay? And that the bottom of the consolidation is close to the 1.16. So having in mind that there's only 41% of the trades, the traders long, what we want to do is we want to trade that 41% and go for long positions. So I would wait for a better price. So if the market was right across here and it's 40%, I think that's very in particular that the market is on high and it's 40%. So it makes total sense for me that it's on a low and it's 40%. So I would just wait at the moment and wait for a better opportunity to enter. Okay. So this is what I mean by watching the fundamental tool first before heading into the trade. Okay, maybe watch from yesterday to today. And let's say then yesterday was 47% long, still the minority on the long side. You still wanting to long. Then today's on the 41%, so 6% less from yesterday to today. Then that's great. We can just go and look to long that pair. Okay. Does that make sense for everyone? Like, I mean, following the pair until it actually gets to the point. Hopefully, it does. So it's updating right now, as you can see, right there. So euro dollar went from 41 to 44 now. Okay, so that's why I mean by you have to check that at least a few times a day. Now, let's go. The first trade is US dollar Japanese yen. So if we open the US dollar Japanese yen, I've mentioned a couple times already that the main target, at least my main target, is the one. First of all, is 144. Okay, so that's a 1 hour chart. So is first on 44. So let me just put this here. Let's put like in gold. 44. And from there, then we can target 142. Okay. If that 144 gets hit, 142. And then from there, we can target 138 being my last, I would say, target. Okay. So that's about it. It's a very simple trading scenario. So 144, 142, and 138. So I'm looking to short the US dollar Japanese yen because I do believe that US dollar on these basic conditions, most likely we will have a very weak US dollar. Okay. So let me just change to so you guys know these are targets. Now let's have a look on how the US dollar Japanese yen is here. If we looked at the US dollar Japanese yen, it's only 32% long and the majority is 67% short. Okay. Now you have two options. You have to basically wait, okay, or believe on all the strategies and look to short it. But as today is Wednesday, what I want to do is I want to follow Wednesday's strategy, that is the FinLogic sentiment tool, and I want to long the US dollar Japanese yen. Okay, so I was just showing you guys that these are my targets. And you have to come to the market, you have to come to the chart with a open-minded, okay? Because sometimes what we want is not what we're going to get. It's pretty simple, I guess, okay? I want that the price to hold on the support line at XYZ because of this, and that. Well, there is no one listening to you that will do the things that you're waiting for, okay? So let's trade long on US dollar Japanese yen and see where that heads to us. We're pretty positive for the month. We've had some really good trades. So we can take that risk, but I still mainly believe on the fundamental sides that is a short position. So if we want to trade long, it's actually a pretty good market at the moment because we are in a consolidation and it's very, very close to the bottom of this consolidation. So remember what I've always said. In terms of like consolidation, you have always three main phases of entries. Okay, you can either enter on the best ever place, that would be right at the bottom. You can enter on an OK, and then you can enter on the I missed the boat, but I still want to enter. Basically, when the market, in a minute, when the market goes, when the market breaks and then comes back to retest, and then it continues to go higher. So that's the moment you enter the position to wait for a better, a higher pullback or whatever. Okay, and of course it happens to the other side as well. So if I can just do like this, so that's the best opportunity to short. That's the second best, and that's like a Mr. Boat, but I still want to enter. Wait for the break, pullback, continuation down. Okay, cool. So you have these two options that you can do. Pretty simple, I would say. Does anyone have any questions? Because I've always say that, but I haven't actually asked it. Do you guys have any questions about this entry method, or what sort of methods do you guys use to enter into the market to actually place a trade on? Let's see what you guys say. Very chill webinar today. Very rainy day in Sydney, actually. Unfortunately. So you guys don't have any entry criteria? And Derek Milikon says, "Are you selling US dollar Japanese yen?" No, I'm longing. Looking to long that. Okay, no one answered me. That's fine. Because if we look here, the signal is buy. So we're just gonna long the market. Now, the best, as I say, the best way to enter the market would be in the bottom of the consolidation. I use breakout after like 2 candles close. Please, what do you see on CHF Japanese yen? Daily direction for our FIB or trend line. That sounds pretty good, actually. That's pretty great. What else? That's okay. You guys have some interesting, how do you say? Interesting entry criteria. Pretty cool. Okay, cool. So for US dollar Japanese yen, I would use this entry that is I would say is the simplest entry possible ever, okay, that you can get. Because you need to wait for consolidation first. So we have a consolidation right here. And from there, we need to wait for either a pullback down of the consolidation. You can enter on the middle or you can enter after the breakout. When you're entering on the bottom of the consolidation, something like this is what we're going to be looking for. Okay, so you want to enter the bottom of the consolidation, you want to exit at the top, and most likely we always have some sort of a weak false breakout, fake breakout here. Okay, so you can put your stop losses below this breakout, because if the market goes actually below this level, then it's something I don't want to have it. Okay, pretty simple. From there, then that's yeah. So from there, that would be the first way to enter. Now, the second way to enter is coming back at the 50%. Now it starts to be a little bit trickier, okay? Because it's the risk reward won't be the same as if we're entering on the bottom, of course. So if you have a middle position like that, a half position like that, your stop losses would have to be below the consolidation level, not below the fake out, not below the fake breakout, but below, let's say, let's see if you want to enter it here, right? Your stop losses would be below these lows, and your take profit would be somewhere up. Okay. Now, usually a breakout, what we want is a continuation of that. Okay, we want a continuation. We want to break and then back and then continue to go up. So majority of the cases, majority of the scenarios, the breakout happens, and then the second thing that happens is the same size of the consolidation that goes up. Okay, so your target for your second position, so let's say this one, would be the top of that. Okay, so it gives you a pretty good risk reward, but still stop losses are on a place that can be triggered. And then the third and last option is the breakout. So the breakout will happen, and then we'll come back to pullback, and then I will put this the take profit same as the previous one, and the stop losses would be below the 50%. Okay, it doesn't have to be perfectly the 50%. It can be just the 50%. Okay, where you think somewhere around the 50%. So these are my three entry criteria for consolidation. Most likely, the first one will get triggered. Okay. And then if the market actually breaks out, I would use my third option. So I can make somewhere around 4% return in US dollar Japanese yen. So that's my trade for USD Japanese yen. So long US dollar against the yen. Does anybody have any questions on that? No questions, no questions. Okay, we can move on then. Okay, we may have a question here. No, okay, that's great. Let's move on. Now, the next one is the euro yen. Okay, euro yen. I love the setup. All clear for me. Yeah, that's great. Thanks. Nice that you like that. So the euro yen. Let's get back to this page for FinLogics. The euro yen is right here as a strong buy. Okay, it's only 14% of the market long there, so that's great. So we can use this um, as a time for us to long euro Japanese yen. And it makes sense because we're selling the Japanese yen here on US dollar Japanese yen. So it makes sense for us to be looking to long euro yen. Okay. So euro yen is happening. Something is happening. Let me delete all of this. Okay. So we are already into some sort of consolidation right here. Okay, we had some sort of fake breakout at the top, some sort of fake breakout at the bottom. So it's pretty interesting how this is going. All right, it's pretty interesting. Now it's exactly the same setup as the US dollar Japanese yen. So let me just actually see something if they have any type of correlation. No, they don't have any correlations. But I was wondering because the euro yen it's doing like a consolidation as of US dollar yen is doing like a consolidation as well, more from the 2nd of August to now, but that's interesting scenario. Let me shake this off. Okay, so that's done. Now second is, let's zoom in a little bit. Okay, and now exactly the same. Okay, the best option would be right at the bottom. Second best option would be around the 50%. And then the last option, I've missed the boat, but I still want to get in, is somewhere on the breakout that is going to happen. Hopefully it's going to happen. Okay. So based on that, it's exactly the same setup. So we would be looking to long the euro against the yen around here. So now the stop losses would be below these lows, as we can see, because these were the breakouts. There's no other breakouts than those ones. Okay, and then my top take profits would be above these levels. Just to give a better risk reward, I would be looking to target the top of that other fake breakout. Okay, so it's a okay trade. I still prefer US dollar Japanese yen, but either of those two, it's great. Okay, now of course the second, let me just Control C, copy and paste here. So again, if the market actually breakouts, this is the target that we're looking to, 175,500. So with that target, we can have something around that. All right. And then if the market actually breaks out again on the top of here, that's even better. We can have another position below the 50% stop losses and take profit just the same as here. Okay. So all of the positions, you're going to have at least 1 to 2, 2 to 1. So you're going to be winning 2 to lose 1. So that's pretty great. And you still be able to carry position. So if, for instance, you want to still with this position open, and when it hits 50% of the move, you close maybe 60 to 70% of that trade, put your stop losses at break even, and continue to hold that until further action happens. That's pretty good as well. And then once breakouts, you're still holding those two positions, you're going to be making somewhere around like 4 to 5% very easy in this setup. Okay, any questions for this one? No questions? Now the last one is the New Zealand against the US dollar. So we're gonna do the New Zealand against the US dollar, and then we're gonna go and have a look at the OCR, okay, the official cash rate. And I'm gonna try to explain to you guys what happened from today's RBNZ in a sense, and why did the New Zealand dollar was very, very bad. Okay. Sweet say it's all clear. Okay, that's good. So let's get ahead. So New Zealand against US dollar. Don't panic, because I know it's a huge move down, but it's okay. Yes, it's a pretty big. Of course, we got stopped out on this trade, but it's okay. Things happen. Yes, it is a huge trade. And if I put in a 1 minute chart, you will see that is even bigger when you look at like this. Okay. So in the 1 minute chart, only this candle here, down 32 pips, but the whole move was down 68 pips. The lowest point of that. Okay. If we go and look at the FinLogix market sentiment tool, we see that New Zealand dollar is 63% long and 37% short. And there's only the minorities on the short side. So there's a very practical way to address this and answer on a very simple way. Short any up moves. Okay. I think that if we try to speculate that moves on a long side, we will be losing time. Okay. Eventually the market will have to come back to do a pullback, as people will be taking profits on these shorts, but at the moment no one is doing that, so we will just be looking to follow the market. So if the market goes up, that's great. We wait for this, all right, to happen, and then from there we look to short. Okay, so I don't want to open a short position right now. because I think that I'm trying to find, it's like trying to long from here. You're trying to find the bottom. I do believe that we can at least go to a 50-minute time frame chart. And if we get a Fibonacci from this top here, just to the bottom, we may have somewhere of a pullback around the 50%, okay? So we may have a pullback to around 50%. I'm not saying we will, but most likely. So around these highs, I would be looking to short. Stop losses would be above this huge candle down, then go into a 1 hour time frame. And take off the zoom. There you go. So a little bit down, somewhere around here, 157,500. Okay, somewhere around here. So the targets is unknown. Okay, because the move was such a strong move, we don't have a target down. Okay, it's a pretty interesting scenario. But the entry point would be around around 0.58,554. Now the take profit is, you have two options. You can either take the profit into a certain price that you think it would be the best for you, or you can just trail your stop loss and maximize your profits. And that's where I believe there's more advantage on doing this. Okay, you may need to be a little bit more patient, but that's okay, I guess, and you can have bigger profits. Okay, cool. That being said, does anyone have any questions? Because the New Zealand dollar is technically it. I'm looking to short, and that's it. And also, the FinLogic's market sentiment tool is saying that there's only 37% shorts. So that's even better, because there's most likely there's still a bigger move to happen. Okay, cool. Now, let's go and try to understand a little bit better the RBNZ. So the official cash rate, it's the OCR, they call it to OCR, was at 325 and now is at 3%. Okay. So there's a 25 basis points cut. If we look at the OCR, the highest point it has been was at 8.25% at July 2007. All right. Since then, the highest was 5.5 into May 2023 after COVID. And then now the rate is at 3. They haven't updated that, but is at 3.0%. So it's at 3%. Okay. If we just look at these, it wasn't any surprises for the market because everyone knew it. Everyone was expecting a 25 basis point cut. So from that perspective, nothing different happening. Okay, really what was expected to happen. It ended up happening. So if we think about other stuffs that I've been teaching you guys, what should we look into a rate statement? Do you remember? Let's see who can answer me that. Don't need to be correct. I just want to see how you guys paying attention to what I'm saying every single day. What are the main things you should be paying attention when the central bank releases the interest rate? Is it they're going to cut or not? What are the expectations? Is it the forward guidance? Is the inflation? Is the Okay, that's great. That's it. Sweets, Eugene, you guys got it correct. It's the forward guidance. Stuart says inflation. That's not wrong. It's correct as well. But that's the second point. The first one is the forward guidance. And then we go to see what is going to happen with the inflation, what the GDP, the gross domestic product, the PMIs, what are they looking for there, etc. But the first one is the forward guidance. What they're planning next. We already knew in some instance that they would have cut the rates. So they did it exactly what we knew. So there's no surprises on that. If they've cut it more than what was new, then this is a surprise. But if they haven't cut more than what was expected, no surprises. Okay. So um, yeah, so that's going to be my main points is the forward guidance. So from today's rate decision, they've they've cut 25 base points as expected, but the forward guidance was the most shocking and alarming point because the forward guidance says that the RBNZ is planning to cut two more 25 basis points, that is a 50 basis point until end of the year. So plans to cut two more 25 BP. So if we look here, sees scope for more. Okay, so that's the whole point. They're considering cutting by 25 basis points in dovish surprise. So it was a dovish surprise. Projected floor for rates lowered to 255 from 285. So what does that mean is basically they had a projection of 285 for the rates, so another 25 basis point cut, but now they've predicted an even lower, that is another 25. Okay, so from 2.85, that is around 2.6 actually, but anyways, 2.55. So around 30 basis point. Okay, so around 55 basis point priced in. But they usually but they usually only cut in like 25, 50, that kind of thing. So they're not going to do a 30 basis points cut. It's very uncommon to be done. But anyways, so they are expecting now to do another 50 basis points, and it's a very dovish surprise because no one was expecting that. Okay, so that's the point. That's exactly it. And it's because the forward guidance. Now, when we look to then the market, the market, look at New Zealand against the US dollar, fell pretty heavily. Look at Euro New Zealand dollar. It's going up like crazy. Like all those Aussie New Zealand dollar still going up as well. You have other currencies backed by the Aussie New Zealand. So there's plenty of I would say fish on the ocean in a sense. Okay, so that's the main reason why the New Zealand dollar is so weak at the moment. Do I believe this will continue? I 100% believe this will continue with the weakness on the New Zealand dollar. What are the trade possibilities then we can get is continue to short the New Zealand dollar with all the strong currencies, maybe like US dollar, maybe like the euro, maybe like the Australian dollar against the New Zealand dollar, etc., and so forth. But that's the whole point about monetary policy. It's what is going to happen. What just happened, we already know. What's going to happen? It's what we want to know. If they tell you that, boom, the market will anticipate, already be going into that to be able to don't suffer as a delay. Okay, so that's my pretty much it for today for the New Zealand dollar. Now, let's get back and review a bit of those trades for the US dollar, Japanese yen, euro yen, and then the New Zealand dollar. So the US dollar, Japanese yen. What I'm expecting here is we are into a consolidation, as we can see, a consolidation phase. So I would like to see the first entry at around 146,900, 146,900. Then from there, we would be looking to get another position at the 50%. When the market already got the first position and it's going for the 50%, I would be looking to get into another position at around 146. 628, and then once we have a break on that consolidation around 148,500, that's where I would be looking to have my last position. So based on that, we already have three I would say three really big and really well planned positions. Okay. The first one right at the bottom, the second one at the 50%, and the last one at once that market breaks. We wait, of course, for the pullback into that support area that is now, was a resistance and now it's a support. And then we target around 150, 600, 150, 500. Okay. Because what the market tends to do is after a consolidation being broke, then it tries to target the same size of that consolidation to the top or to the bottom, whatever side it broke. Okay, so that's the first trade on US dollar Japanese yen. When we come to the FinLogic sentiment tool, we can see that there is a signal of buy, so everything matches pretty well. Now, the second trade is the euro yen. So euro yen, well, that was really close. Okay. Euro yen nearly got triggered. It's a very similar setup with the with US dollar Japanese yen, because the main reason is we have both of those currencies have the Japanese yen into the back as the quote. So the quote being weak, most likely the base will gain, and therefore we're going to have a good long trade, I would say, if everything goes well. Now, the first position would be around 171. Then, if you want to keep that position open, move your stop losses to break even. Once the market hits the 50% of this consolidation right at the bottom, we would be looking to enter another position at the 50% with the stop losses below the consolidation. And then once the market breaks the top, we can have another enter on the pullback and target 175 500. Okay, so that's a pretty good trade as well. I do believe if the Japanese yen doesn't need strength overnight, we can probably have US dollar Japanese yen and Euro Japanese yen having heated targets in a very soon period. Okay, cool. Now, the last position is the New Zealand against the US dollar. Now, just coming back for Euro yen, we can see here that the Euro yen is on a strong buy. Don't forget to be checking these positions every single day if possible, because that helps a lot to decide if you should be into the trade or if you shouldn't be into the trade. Otherwise, you're going to have to wait for me until next Wednesday for us to have a chat between that and then, have a better understanding. Ooh, I think that's it for the euro yen. Now, moving to the New Zealand against the US dollar. The New Zealand against the US dollar we're short, okay? It's very good because the fundamentals line up and also the sentiment too lines up as well. So you can see right here that the New Zealand against the US dollar is on a sell side. And then you have 37% only short. Okay, so that's pretty great. Now, the main idea for the New Zealand dollar is that we don't have a very activable entry point here. So I'm looking for a pullback on this big red candle down, up, sorry, and then I would be looking to target somewhere around 056, 058, around these levels. But 057, sorry, 057, 600. 56 is very far away. So around the entry would be around 058, 550, 580. And then once that gets triggered, and you break this little bottom of 58 to 100, 058 to 100, I would just close majority of the position, move my stop losses to break even, and then try to trace the position as far as I could so I could maximize the profits on those positions. Cool. Now, I think when we look to the New Zealand dollar here, it's one of the best opportunities because the sell side is small, but it's not that small as, for instance, like euro yen, that is only 16%. So for the euro yen, we may catch a smaller up price, but for the New Zealand dollar, we may catch a bigger down down move. Okay, so because to get to 16%, the New Zealand dollar would have to go again, the same move to get down to 16%. Okay, so it's in terms of risk reward, I believe the New Zealand dollar, especially with the RBNZ announcing that they probably will do more cuts, I think that's one of the best trade setups for today. Cool. That being said, that's it. So I think we come to an end of another webinar. I hopefully I could make things clear for everyone, and you guys could understand a little bit more of what's going on, and plus have some trade ideas based on the sentiment data and capturing some low risks and high reward setups. Tomorrow I won't be here, okay, so I will be back only on Friday for videos on YouTube, but I will be back for webinars back on next Tuesday. All right, so thank you so much, everyone. Hopefully you guys have a wonderful rest of the week, and I'll chat to you soon on Friday. See you guys. Bye bye.